Hello everyone, in this video we are going to discuss about the RBI's revised PSL framework, priority sector lending framework for small finance bank and prudential relief for UCBs, right? So there is a ease of target for SFBs, small finance bank, and prudential relief is there for UCBs. We'll be discussing these two things in our today's video. I would like to tell you that we have launched the RBI Grade B 2025 batch. This is a complete course, both having phase 1 and phase 2. This is with the physical books. You'll be getting physical books as well. You can check the course highlights. You can also download the Oliveboard application for getting all the updates related to our YouTube sessions and courses. The first thing that we'll be studying is the review of PSL norms for small finance banks. We all know that on small finance banks, PSL norms do apply, right? Small finance bank were basically established to further the financial inclusion. So for enhancing the financial inclusion penetration, we have established small finance bank by primarily undertaking the basic banking activities. So we all know that small finance banks are undertaking the basic banking activities for the underserved and the unserved section of the society, right? So their priority lending or their priority sector lending obligations are usually higher than the other banks, right? Why? To ensure focused credit flow to priority segments. So their priority sector lending obligations are usually higher than the other banks. What were the earlier norms? The earlier norms were SFBs were required to allocate at least 75% of their ANBC, adjusted net bank credit, to the priority sector lending, right? So the earlier norms were we need to allocate 75% of the ANBC for the priority sector lending areas, out of which 40% of the ANBC will be allocated strictly to the PSL subsectors as per the RBI's prescribed norms. So this 40% out of the 75% needs to be allocated to those priority sector lending. Priority sector lending के अंदर भी there are a lot of subsectors, right? So they need to be allocated to that subsector as prescribed by RBI. Because those are the high priority areas in the priority sector lending areas, right? Rest of the 35% can be allocated to any PSL subsector. Any PSL subsector. So that was the earlier provision. What is the current provision after this revision? There is a major change in it. First thing, they have slashed the PSL targets from 75% to 60%, right? 60% of ANBC or CEOB, that's applicable in the previous as well. CEOB is also considered, right? So they have slashed it by 15%. There is a 15% reduction in the PSL requirements overall in the small finance bank, right? Now what is the new breakup of this 60%? Out of the 60%, again 40% is the subsectors which are prescribed by the RBI. Okay, so out of this 60%, 40% still small finance banks will be investing in the prescribed subsectors of the PSL by RBI, right? Rest of the 20% can be freely allocated to the PSL, any PSL subsector, right? So what is the change basically? The change is earlier there used to be 75% requirement. Now there is 60% requirement instead of 75%. They have slashed it to 60%. In that 75%, we need to allocate earlier 40-35. Now the new limit is 40-20. Okay. So basically what they have done is they have changed it. They have reduced it by 15%. That freely allocated allocable PSL subsector limit of 35%, they have now slashed it to 20% as of now, right? The 40% is a compulsory thing that you need to allocate in the RBI prescribed subsectors within the PSL limits. Rest of the 20% now you are free to invest in any subsector of the PSL, right? So that's the revision basically. What will be the major impact of this change? Definitely it will reduce the regulatory burden because they have somewhere or the other slashed the PSL targets for small finance bank, and this promotes targeted sustainable lending, right? So this will be definitely promoting the targeted sustainable lending by the small finance bank. Now they have their own choice to lend the rest of the 15%, that is the reduction amount, right? They don't have to now allocate 75%, they just need to allocate 60%. Rest of the 15%, which is now free, can be definitely be allocated to the targeted or sustainable lending as per the SFBs, right? So this aligns with the PSL framework as well, closer to that of the universal banks. Okay, let's read this example quickly. Let's understand this example. Let's suppose the ANBC or COB is 1000 crore, right? That's 1000 crore. Now I need to allocate it. Right? So earlier I used to allocate it as, the first thing what we need to do here is we need to invest at least 75%, right? So 750 crore. Out of that as well, 400 crore specific categories prescribed by the RBI, and rest of the 350 crore to any category within the PSL subsector. Now if I do have 1000 crore of ANBC, then as small finance bank I need to allocate 600 crore only, right? Out of this 600 crore I need to allocate 400 crore to those prescribed sectors. Rest of the 200 crore I am free to invest in any other PSL subsectors, right? So this is the provision basically, right? Here you can see that these changes are there in the circular as well. I have pasted the screenshot from the circular as well for better understanding. You can have a look, have a quick reading of the circular as well, right? It's a short circular. Next circular is prudential treatment of PSL shortfall contributions, right? Prudential treatment of the PSL shortfall contributions of urban cooperative banks, right? This is UCB specific. The previous one was SFB specific. This is UCB specific. So urban cooperative banks are required to meet priority sector lending targets. We all know that they are also required to allocate the priority sector lending, loan to priority sector lending, right? When they fail to meet these targets, let's suppose they are not able to meet the targets, they fail to meet these targets, then they need to contribute to the, then they are required to contribute to funds of NABARD, NHB, SEBI, Mudra, right? It's an indirect way of financing in PSL only, because usually in NABARD, NHB, SEBI, Mudra, right, they are doing that only. The subsectors are mostly common only, right? So if you failed, let's suppose a UCB failed to achieve the PSL targets, then in that case what they can do is they can contribute to the fund of institutions like NABARD, NHB, SEBI, Mudra, etc., right? So this contribution of funds will be considered as if you have completed your priority sector lending target, right? Because ultimately these institutions will be investing in these priority sector lending sub areas as well, right? So instead of direct lending to the priority sector, these contributions are treated as an alternative compliance route, right? These contributions are being treated as a alternative compliance route, right? Exemption from the exposure norms. Now they have given an exemption from the exposure norms. What is the existing rule? There is a exposure limit for the UCBs. Let's suppose you are giving it to the single borrower or party, maximum 15% of the tier 1 capital, or if you are giving to the group of connected borrowers or parties, then maximum limit is 25% of the tier 1 capital. Now in the updated circular, RBI has exempted these contributions to NHB, NABARD, SEBI, Mudra, right? So NHB, NABARD, SEBI, Mudra contributions won't be falling in this ceiling, right? In this ceiling of 15 and 25%, we won't be including these kind of contributions. You can make it as you like it, right? Jitna marzi aap contribution kar sakte ho. They won't have any kind of cap, right? They won't be having any kind of cap. So this is the update. Now these contributions are not considered as a lending risk, right? There is no kind of a lending risk in this thing, right? There is not at all a lending risk in this in the usual sense. Why? Because they are compliance mechanism. Ultimately they are lending in the PSL areas only. So excluding them ensures that the UCB can meet the exposure norms as well, while also fulfilling the PSL obligation. Now if there is a limit, and let's suppose the UCBs are not able to, they fail to meet the PSL targets. Now they wish to contribute to these institutions. However, there was a limit earlier of 15% for single borrower and for group entities 25%. So RBI has relaxed that if you are contributing to these institutions, you don't have to follow that limit, right? If you are contributing to these institutions, the limit of the contribution limit that you, the contribution that you invested in these organizations, in these institutions, will not be counted in that limit, right? So risk treatment, they have also stated risk weight treatment. What will happen, how much risk weights you will be giving if you are contributing towards these fund institutions, right? So risk weight determines how much capital a bank set aside. Let's suppose I'm a UCB, then what does risk weight means? How much capital I need to set aside for a particular asset. This is an asset I have contributed in an institution, or I have given a loan to PSL. This is my asset, right? So इस asset के सामने we need to create a risk weight as well. A capital must be set aside. उसी को हम बोलते हैं capital adequacy ratio. उसी में ही हम क्या देते हैं, risk weights देते हैं, right? Higher the risk weight, जितना ज़्यादा risk weight ज़्यादा होगा, more capital is required. Obviously जितनी ज़्यादा risk लोगे उतना ज़्यादा आपको CRAR maintain करना पड़ेगा, right? What treatment is given here? Contribution made by the UCBs towards the eligible funds as PSL shortfall, right? Let's suppose I'm contributing towards NABARD fund, towards the because of my PSL shortfall, I have contributed, I have made contributions to NABARD or NHB, right? Now how much risk weight to give to this contribution, how much risk weight I need to give. So this will be classified as all the other asset. ये all the other asset के अंदर आएगा, आपके risk weights के अंदर, all the other assets, and will be attracting a 100% risk weight here, right? What will be the implication? These funds will require full capital backing, right? Ultimately जा तो PSL को ही रहा है indirectly. So definitely you need to keep here the full capital backing under the capital adequacy norm, and it ensures that the UCP maintain a adequate capital to buffer, right, against any kind of credit risk. So if there is any kind of credit risk, definitely UCBs can manage it because they are already maintaining a higher risk buffer here, right? So that's all guys, we have covered 2 short circulars in a short video. Thank you so much for watching. मिलते हैं किसी और वीडियो के अंदर. Bye bye, take care.